The U.S. economy continues on the positive path with more economic data due out this morning. The bond market continues to be rattled as investors switch gears with rates moving higher. Apple is close to reaching 600 for the first time today, while the S&P looks to breach the 1400 mark. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So Scott, yesterday we saw the markets digest a little bit after Tuesday's action. Was it healthy, the behavior we saw?
You can't see blockbuster moves every day. So typically when we see a big igniting move like we saw on Tuesday, the next day or the next few days you want to see digestion. And yesterday the market digested very well. You still had some sector rotation, you still had some stocks on the move, but the real story yesterday was the bond market and interest rates with the Treasuries.
And we do see Treasuries continue to slide. I know that you went long on TBT on Tuesday, so today what's the trade?
Well, what's funny is everyone's trying to figure out where it's going, what the story is, what's the ramifications, higher rates, is it good, is it bad, a stronger dollar, how is it going to affect the world and our economy? Right now I think a stronger dollar is good short term. I think rising rates will be okay for the economy until we get to that inflection point when it's not. But right now we talked about TBT. Just want to show you real quickly. Everyone has been wondering how and when, and for a technician like myself, all it was, we close above 1970, you go long the TBT. If you did so, you made a nice gain here, and I think it has some room to 22. If you wanted to do the reverse side, the TLT, you look right here. Look at this long, upper range here that was rounding down below the moving averages. A close below that 115 was a signal to get short, stay short, and if you did, you got paid yesterday. And the next move is all the way down here to about 107 on the TLT, and then we'll figure it out, and then we'll figure out the next move.
Now, do you think now is the time to sell bonds and move into equities?
I think you have to have a balanced portfolio, and you can't just be one-sided. I do think that equities can continue, and I think the bond market could sell off. And if you look here at a chart of the SPX, you will see we've had a really nice move in equities, and I know people like to chase excitement. You shouldn't do it. If you missed a move, you have to figure out how to get involved. And here's that accelerated uptrend that we've been following. Here is that recent high. Nice little pullback. That was that 25% fib, held that, 1340. And now look at us, okay? We clipped 1370. Yesterday, we were just talking about digestion is good. And if you look here, market didn't sell off yesterday. Everyone's saying, oh, this was the capitulation buying. You know what? We held in well. We're right now flattish, and I do think we're going to eclipse over 1400 pretty soon, could be today.
All right, well, we got to talk Apple. Of course, the new iPad is on the way out, and it's approaching that $600 mark. Scott, what do you think about Apple right now?
I think it's had a tremendous move, and if you're an investor and you've been staying the course, you've made a lot of money. As a trader, it's been a great vehicle. Lately, it's a little bit difficult. Today's my first day I'm coming in a while. Flat Apple, I'm not involved. It's up 7. If you look at the chart here, you will see for me, it just got a little bit too extended. Here was the pullback to the 10-day, so that was buyable. Above this recent high was buyable. Above this last pivot as a trader was buyable. But now as you get 1, 2, 3 up days in a row into a fourth, into 600, it becomes a little shaky, so to speak. So at this point, if you're an investor in Apple, my price target earlier this year was 700. Stay the course. As a trader, it's been a little erratic, and I would just step back if you can't handle the speed of the trade.
All right, and on the flip side, you've actually called Amazon pretty weak. Is this one that you are avoiding for the short term, or are you going to actually short it?
Well, I want to see it ignite. I've tried to play the puts a few times. It hasn't gone below this lower pivot. For some reason, Amazon is definitely showing some relative weakness. People are talking about high PE. They don't think the Kindle introduction went well. I don't think so either. If you look at the chart here of Amazon, you will see that it's well off the highs. It's showing you such a different story than Apple. Here's a high, lower high. Here's this lower wedge that's coming into an apex. It could change. If Amazon were to get above and stay above 188 to 189 with some volume, we could break above, and they might be just looking for vehicles to go to the upside. But if we start breaking below this 177, you're going to see a move to the downside, and it could be quick. I'm leaning more on the downside. This macro chart to me is more bearish than bullish.
All right, let's talk casino stocks. That's kind of a fun topic. Asian traded casino stocks were on a roll on Tuesday thanks to a positive view of the industry by Deutsche Bank, signs of continued growth out of Macau. Are casino stocks with heavy Asian exposure where we should be focusing?
Yeah, and it's been a great vehicle. Win, LVS, I think, two great stocks to stay with for the year. If you look real quickly at LVS, you have a nice macro wedge right here. I'm long some. I think it breaks above this 56 area. It can continue. And look at this little guy, Caesar. Just came public. I started buying it yesterday. It broke this mini descending trend line. I think this gets to 14, 15. So I think there's a lot of opportunity in the casinos as well as a lot of the other segments. So I think we got to turn it over to you and close it up because we have a lot more to go into in the long form.
Yes, we'll dive into all that and more, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.